Today isn't just make or break for USDC, it could be make or break for the entire global economy. Sounds hyperbolic, but if you're old enough to remember 2008, this is what we could be looking at, and every investor is asking the same questions. Should they buy USDC for a quick profit, invest in Bitcoin, or cash out entirely? Making the wrong decision could have catastrophic consequences for your portfolio, so let's get into it. The collapse of Silicon Valley Bank and the depegging of USDC from the dollar has sent the crypto markets into panic and uncertainty. Regulators are scrambling to find solutions. Janet Yellen told the Financial Times the government will help depositors, but completely ruled out a bailout. Could potential bankruptcies be looming? Is a global recession about to occur? And after SVB, who's next? Big fam, it's been a while and I am thrilled to be back. My name is James, and as Chief Content Officer working for a crypto think tank, I understand the importance of staying up to date with the latest developments in the crypto market. That's why I'm excited to reintroduce you to CryptoPig, the channel that's dedicated to keeping you informed and engaged with all things crypto. This is your source for news, reviews, and insights that will help you navigate the market with confidence. So make sure to subscribe, hit that notification bell, and like the video. The end of FTX was our Black Swan event, we thought. Then we saw crypto funds closing all over the place and the contagion spread. But then just a week ago, it seemed like the market had settled. We saw Bitcoin back up over 40% and Ethereum over 35%. I had suspected we would see another dip, but not one brought on by the biggest banking collapse since 2008. So what has caused all of this, and what does it mean for the markets moving forward? And should you be buying more Bitcoin as a result? Let's explore. Just a week ago, Silvergate, best known for being the crypto bank, admitted they were in trouble thanks to being overexposed to FTX. Silvergate manages the accounts for FTX alongside Coinbase and Gemini, but the exposure actually goes much further. As the Financial Times points out here, more than 1,600 of the world's top crypto miners, exchanges, and custodians have been using it to deposit and transfer billions of dollars each month. The bank that has been in operation since 1996 went into liquidation at the beginning of last week. Effectively, it suffered a bank run, and that forced the executives to liquidate their securities held in reserve. Shareholders have been completely destroyed by its collapse, but depositors were able to exit unscathed, and the government didn't need to step in with their FDIC insurance fund. It turns out that Silvergate handled the situation as well as anyone could hope for. Contrast that though to SVB, the Silicon Valley Bank, this weekend, and you have a very different scenario, one that could make or break any chance of a bull market return in 2023. SVB is the biggest US bank failure since 2008, and it looks like it's been caused by a massive bank run. The bank's management sold $21 billion of bonds at a $1.8 billion loss, and because they had bought nearly $57 billion of something called hold-to-maturity bonds, they were also sitting on an additional $16 billion in unrealized losses. Then Silvergate collapsed and spooked SVB depositors who understandably wanted to get their money out fast. Unlike Silvergate, it looks like SVB will need help from the FDIC insurance fund to reimburse depositors, and uninsured depositors have been told they are likely to still be reimbursed, but in the future. When that is, no one has a clue, and communication has been poor to say the least. Woo Blockchain on Twitter auto-scraped the SEC filings from the last few years, and if this data is accurate, well, major VCs could be locked out of 10 to 15% of their assets under management while this mess gets sorted out, and its depositors are said to include A16Z, Pantera Capital, Hamilton Lane, and Union Square Ventures, some big players in the crypto, blockchain, and Web3 space. On Friday, we saw the Bank of England step in to close down Silicon Valley Bank's UK subsidiary, and depositors here are only insured up to a maximum of £85,000, which is about $103,000 to our US viewers. Now, the Bank of England said that SVB's collapse here will have a minimal impact in the UK. The impact on the global economy won't be known until later today, when the Fed is holding an emergency meeting. For crypto though, we saw an immediate impact from the potential exposure that Circle, the company behind USDC, has there. This news caused an almost immediate depegging of USDC from the dollar. Are we about to see another Terra Luna situation on our hands? While it's unknown how much of Circle's money is actually held in SVB, the rumors that Circle could go bankrupt sent shockwaves through the cryptocurrency community, with experts warning that it could trigger a crypto recession and potentially impact all crypto companies tied to the stablecoin. Circle's January attestation report shows that the company had about $9.88 billion in cash deposited at regulated banks to back its stablecoin's value. That included SVB and Silvergate as well. It raises concerns that the backing of USDC may no longer be complete, and it could become more fractional than needed to maintain stability. The real risk here, though, is that we see an effective bank run on USDC. Both Silvergate and SVB were not actually illiquid in any way, but the run on deposits was enough to cause them to collapse regardless. We could see a similar situation with USDC. A total depegging of USD could trigger a massive crypto recession, as USDC doesn't just affect retail investors. Many crypto companies have their treasuries held in USDC as well. This could cause potential bankruptcies almost instantly, and urgent updates from Circle are being awaited. The potential bankruptcy of USDC could have severe consequences for the entire cryptocurrency market, not just those holding USDC. However, its impact on Bitcoin might surprise you. Now today is going to be a critical moment for crypto and the wider markets in general. The Fed has called an emergency closed-door meeting where the FDIC and the Federal Reserve are weighing up whether they can create a fund that would allow regulators to backstop more deposits at banks that run into trouble following Silicon Valley Bank's collapse. The problem is that now we're hearing that the Fed will not go beyond the terms of the FDIC insurance program. So it's already being speculated by many, including former presidential candidate Andrew Yang, that if the Fed doesn't step in, there will be more bank runs on regional banks. Over a number of tweets, he said, "In the absence of some kind of action, you'll see thousands of mass layoffs and defunct companies, a wiped out generation of startups, huge problems in California in particular, and a spreading financial contagion that will infect a host of regional banks at a minimum." He also added, if the feds don't step in for Silicon Valley Bank, every sane depositor will pull funds from any bank that's not JPM, BAC, or C, or too big to fail. How does that not cause runs on smaller regional banks? And we're already seeing social media videos of people queuing at their local banks to draw out their cash. The big problem is that we operate now on a fractional reserve system, where the banks don't actually hold enough money to cover all of your deposits. If you're in the UK and this chaos spreads here, you are only insured up to £85,000 per bank. So it doesn't matter how many accounts you have with the bank, it is literally £85,000 maximum. Anything over that could be subject to bail-in powers. This is where the bank could literally keep your money to pay off its debts. What can you do to avoid this? You can either move to cash, or you can buy more Bitcoin and hold it in your own wallet. If the markets collapse, yes, of course, Bitcoin's price will drop, but you will have control of it, and Bitcoin will bounce back. In fact, this whole drama could actually ignite a new bull run for blue chip crypto, as people lose trust in the banks and learn more about Bitcoin. The other takeaway is to invest in projects with utility that you will make use of yourself. As you guys know, I am an Opulus fanboy, and I will be adding more Opul to my portfolio. They had some trouble with Algorand recently, but I've been told, and very reliably from a good source, that they've sorted it out and the launch of the platform is going to go ahead as planned. I think we'll actually see a major pump on the launch of the platform. I'm really excited to actually start putting my Opal tokens to work. And now, to put things into perspective, regardless of what's going on in the markets right now, HTF Market Intelligence recently reported that the NFT music market is set to reach $428 million of value by 2029, and Opulus is one of the key players they've already identified in that report. What about USDC? Right now, USDC is holding at just over 99 cents, and it does look like it will regain parity now. At its low of 88 cents, it would have made for a very profitable trade. However, if it had depegged properly, it could have freefalled to literally zero. And even though that is incredibly unlikely, in our opinion, the risk was just too high. Something else to keep in mind is that as USDC depegged this weekend, we actually saw a huge pump into Bitcoin. On Friday, as SBV collapsed, Ryan Selkis, CEO at Messari, tweeted "Buy Bitcoin." So if USDC dips even more, we could actually see more USDC being swapped into Bitcoin to avoid the dump, and the price of Bitcoin being pushed up even higher. Do you agree, or is USDC a trade you would have taken? Let us know in the comments down below, and be sure to subscribe to the channel, hit the notification bell, and I look forward to seeing you in the next one. Bye!